Hello and welcome to Leaders of Tomorrow, India's largest platform for anything and everything related to MSMEs, SMEs, startups, and for anyone that is aspiring to turn entrepreneur and for almost every Indian that is wanting to look at money differently. I'm Sumit Lakhotia, and every Tuesday we bring you a special look at managing your finances as an entrepreneur, and even if you're an everyday Indian trying to get more bang from your buck. This week, we're focusing on freelancers and gig economy workers. So, with the boom in the service industry over the last many years, it's important for freelancers to know how to manage their cash flow and investments. And for that, we have two experts lined up on the show who will be sharing their guidance for you. Hemant Rustagi, the CEO of Wiseinvest Private Limited, will share his thoughts on how freelancers can get the most bang from their buck. And founder and CEO of Finology, Pranjal Kamra, talks about why it's important for gig workers to know the basics of personal finance, even if their line of work is far from the world of numbers. But before that, here are some developments that have taken place in the last few days that you need to know. I'm now in conversation with Hemant Rustagi, the CEO of Wiseinvest Private Limited. Now, Hemant is a veteran of the mutual fund and personal finance industry with over 2 decades of experience in guiding people to better manage their money. Hi, Hemant. Thanks for coming on the show. Let's start off. While we're talking about freelancers and people in the gig economy, getting loans is tough for them. How should they manage because they don't have a salary slip? What's your advice on how they can work around it?
Yes, Sumit, if you look at one of the biggest aspirations that all of us have, including the freelancer as well as those who are working in the gig economy, is buying a house. And we also know that this is our biggest investment that we make, and invariably, most of us require a loan. And as you rightly mentioned, it can be a little tough for those who are freelancers or those working in the gig economy to get a loan. When you're talking about such a big loan, what I have observed is that the public sector banks are a bit rigid in terms of giving loans to these two segments, whereas some of the private sector banks are quite open. In fact, I have seen that some of the private sector banks offer a special service wherein they give you expert advice on various issues relating to the housing loan, and all that require is basically your ID proof and your ITR for the last 2 3 years. So once you are able to give them an also 6 month bank account statement, you can get the loan from them. So yes, it is a bit tough, but it's not impossible. One has to work kind of a little hard, look at options. But like I said, there are options available to take loan even for freelancers as well as those working in the gig economy.
Super. Uh, Now, Hemant, we'll take a couple of steps back. So as what we say, the tenets, the main important parts of personal finance planning is always first about creating kind of a emergency fund. So let's talk about that. How would you guide freelancers on what is the amount that they should keep in a emergency fund, and how should they go about accumulating that?
Well, I think this is a very important aspect. This is what we call the risk management. In fact, there are two aspects to it. One is the insurance, which includes the life insurance as well as the health insurance, and the second part is creating an emergency reserve. We know that the freelancers do not have regular income. They can be issued in terms of the kind of income that they make, and they can be irregular income. In fact, why only these two segments? I would say even for those who are getting regular income, should be creating an emergency reserve. It helps you in tackling some kind of financial emergencies. We have seen that in the COVID-19 times. There have been difficult times. The income has not been there. So emergency fund is something that allows you to not only maintain your lifestyle but also making sure that you're not getting disturbed in terms of your financial requirement. Now, so what we are saying is that you must have an emergency reserve. Second important aspect is it must be adequate. So generally speaking, it should be around 6 months, equivalent to 6 months of your expenses. And when I'm talking about expenses, I'm not talking about only household expenses. I'm talking about all the financial commitment that you may have, the fee for the children education, if you're paying any EMI, your household expenses, any kind of expenses. Maybe it should not include discretionary expenses to that extent, but definitely expenses which are must be there should be taken care of. So you have adequate in 6 months, like I said. And then if your income is highly volatile, then I would recommend that make it for at least equivalent to 12-month expenses. Third important aspect of emergency fund is that it should be easily accessible. The last thing you want to do is that something that you put aside and you're invested in the equity market, and whenever there is a requirement for that, then you see the markets becoming volatile or markets down. That's This is not a kind of situation that you would like to face. So have an emergency fund, have adequate emergency fund, and put it in the option where it is easily accessible. For example, you can put it in your bank account, bank short-term FD, or some of the options from the mutual funds like funds. So these are the options that you can consider for parking your emergency fund.
Super. Hemant, one other angle which is different for freelancers is their tax component. So, as a salaried individual, they know the amount of tax the company cuts in some amount of TDS. What's your advice for freelancers? How should they manage tax payouts or preparing for tax payouts?
Well, I think this is a very important aspect for freelancers. I think it should all begin with separating your income and your personal expenses. So my recommendation always is that many times what we've seen is the freelancer will maintain only one saving account. So the income also comes there, expenses also, the personal expenses and the business expenses, they all get mixed up. I think it's very important maybe to look at opening a current account and opening a saving bank account. Okay, let the income come in the current account, and you can draw money from there as your salary. So you can pay yourself salary every month so that your personal expenses are separated from your business expenses. It's important for you to be aware of what are the tax benefits which are available to you as a taxpayer individually. Also, what are the expenses that can be claimed as business expense, because that's equally important. Is we all know that if you are earning on your own, you have to pay advance tax. So be aware of the fact that you need to pay advance tax, and it's equally important. We talked about creating an emergency fund. Many a times when the earning is there, we need to always remember this, that we have to pay tax on that. Okay, and there is a pattern in which you have to pay advance tax. Follow that, keep that money aside, make sure that you have the money available to you when you have to pay tax. So uh, you know keep your expenses separately, maintain everything separately, and
Yeah.
pay your taxes in time to avoid any kind of penalty or any interest which you may have to pay later.
Absolutely. Hemant, one last question to you on credit cards. What's your thoughts on credit card? Because for freelancers, so one angle of credit cards is yes, it can help in an emergency, but of course, people have to be careful that the it shouldn't be too far beyond the due date because the interest on credit card can be really heavy. So, how can freelancers maybe use this or use it in a regulated fashion? What's your advice to them?
Definitely requires some amount of discipline. If as a freelancer you're able to get a credit card, it's a good thing to have. It also helps you build a credit history. That if you're paying your credit card bills properly at time, it helps you in building up a credit history. But you have to be very, very careful, because sometimes you can get carried away by thinking it's easy money, because you have a certain amount of limit, and you feel that even if the income is now that it'll come later on, let me spend today and I can pay later. I think this is how you get into a debt trap. It's very, very important that having a credit card can be very, very useful for more than one reason. But it's equally important to ensure that you're not overspending. You're not, kind of using it as an easy money. And that will come only from the discipline. And I think it's very important, again, if you want to avoid a situation like this, to follow some kind of budgeting. Okay, while you may not be, in a position to kind of estimate as to how the income will come, how much will come, but I'm sure you can control your expenses. So if you control your expenses, you will never get into a situation where you have to use revolving credit on the credit card, which can be very, very expensive, and like I said, can actually result in you falling into a debt trap. So certain amount of discipline is required in how you use your credit card.
Thank you for talking to us, Hemant. On that note, it's time for a short break. And on the other side, Pranjal Kamra of Finology talks to us about how gig workers should educate themselves about managing their finances. Don't go anywhere. We'll be right back. Welcome back to Leaders of Tomorrow, India's largest platform for everything related to MSMEs, SMEs, startups, and aspiring entrepreneurs. On this special episode, we're looking at how freelancers and gig economy workers can manage their cash flows and investments better. I'm now in conversation with the CEO of Finology, Pranjal Kamra. Now, Pranjal set up Finology in 2018 with an aim to educate newbie investors about the nuances of investing. His easy to understand explanation of complex financial terms has helped grow his following to over 2.8 million on YouTube. Hi, Pranjal. Thanks for talking to me here today. Pranjal, when we talk about personal finance for freelancers, why is it important that they know the basics of personal finance, even if their career is not related to it?
Be it freelancers, be it employees, we all work day and night to earn money. Active income, we have been taught to earn active income since our school, our parents taught us, our colleges taught us. But what about passive income? So how much I end up with at the time of my retirement, it depends on how well I managed my finances and how well I generated passive income. In fact, with great passive income, you can increase your net worth at the time of retirement by up to 40%. So, at the time of retirement, whether you end up with 6 crores or 10 crores will actually depend on your passive income. So, think about it this way: we work 8, 10 hours a day, 35, 40 years of our lives to make 6 crores, suppose. And by just passive income, by just thinking about money intelligently, we can grow that 6 crores to 10 crores. And thereby, this is an aspect that no one can afford to ignore. And this is why, specifically with freelancers, you never know how regular your income would be. And thereby, to learn to manage your money is even more critical for freelancers.
So I'll take that point ahead, Pranjal, because you're right, the income is not regular. In that case, how do you suggest that they go about their investment journey? Because as a salaried individual, people can invest regularly every month, but that's not the case for freelancers. So what's your advice?
So, we'll start with what they should not be doing, what not to do. If my income is not very regular, that clearly tells me that I can have two circumstances. One, either I would not have money next month to invest, or secondly, because my earning is irregular, I did not earn anything this month. Therefore, I might need to liquidate to meet my monthly expenses. So I would not invest in anything that has a lock-in period, which means ULIPs are a strict no as an investment option. I wouldn't be investing. ELSS or tax saving mutual funds only if my tax saving bracket is not utilized and I am under the old regime. Anyways, if you're starting now, you should be in the new regime, and these tax saving instruments are irrelevant. So anything that has a lock-in, I will try to avoid that, except retirement plans. Retirement plans, the longer the lock-in, better it is, because then you're not tempted to redeem it. So NPS is a great option for your retirement, because as a freelancer, no one will give you pension but you. So NPS is a great option. But for regular investments, nothing that has a lock-in. So stocks are good, say mutual funds are good, FDs. I would prefer auto sweep savings accounts or current account rather than FDs. I'll tell you what that is. If you have a current account, a savings account, we assume that on current accounts we'll get no interest, and on savings account we'll get 3% or so. Whereas most banks offer something called auto sweep, which allows you to earn interest similar to what fixed deposits offer, while giving you the flexibility of the savings account or current account. So these are some very basic steps through which you can instantly increase your passive income.
And Pranjal, I also know that some savings accounts now have even started offering a higher percentage, and even started offering like a monthly interest payout as opposed to a quarterly. So obviously these small things important, which can help all our viewers. Moving on, Pranjal, so we're talking about the investments. Let's look at the other angle, the expenses. How do you decide on your expenses? How do you decide when to take up a big expense? How do you decide when to take a personal expense, like plan for a vacation, or buy something, some electronic gadget or something for the house for yourself?
So I think, here at times we need to first understand what kind of expense are we planning to incur. Sometimes we are not very clear about it, because what does traditional accounting tell us? Traditional accounting tells us that car is an asset, whereas from the personal finance perspective, it's not an asset. It will not give you regular income. When you sell it, no way you're going to get your investment back. So from personal finance perspective, it's not an asset. From accounting perspective, yes, it's an asset, because you have to follow the double accounting method and whatnot. Similarly, at times we buy flats or houses and we think we are buying an asset. But the simple concept about buying real estate is that land is an asset, and the further you are away from the land, you are buying a liability. So if you are buying a property in a 5-star society, the land prices is minimal, and then on top of it is construction. But the major portion of your expenses is that you are buying that experience. You're not buying land, you're not buying the constructed flat, you're buying an experience. So that experience part of your real estate purchase, that's a liability. That's not an asset, because 5 years down the line, there will be a 7-star society next to it, and then no one would be willing to buy the same experience in the older society. So I think it's more about how we view things. It's more about our perspective and being honest to ourselves that what are we buying. Once we are honest, there's this simple rule called 50-30-20 rule, which simply states that out of your income, say for freelancers, if it's not very regular, an assumed annual income, what will be your annual income? 50% of your annual income should go towards meeting your needs, 30% of it should go towards your wants, and 20% should be your savings and investment. So you can plan it that way, following this simple rule.
The other thing becomes that, okay, if somebody does follow this 50-30-20 rule, then they come to the point of the 20% that they want to invest in. Usually, we talk about invest in a safer asset, like a liquid fund maybe, that gives you smaller returns but kind of guaranteed, or maybe in like fixed deposits. The other angle is to invest in risky assets, which give you, if you're lucky, or if you invested right, you get a lot of payout. For freelancers, how should they manage their investments? How should they look at maybe safer assets, or should they look at riskier assets? How do they decide this?
In fact, I think before thinking about investment, you have to get your basics covered. So you have to make sure that you have emergency fund for 8 to 10 months worth of your annual expenses, monthly expenses. So if you have monthly expense of 20,000 rupees, you should have 10 months of your monthly expenses parked in your savings account for to cater to emergencies. So that's first basic. Before thinking of investing, make sure you have that and don't touch that. Second is your health insurance. Anyone can fall ill. So your health, because creating wealth is a slow process. It will take time. Whether you take more risk, whether you take lesser risk, it will still take 10 years or 15 years or 20 years. So if wealth creation ordinarily takes, say you plan that my retirement corpus has to be 5 crores. If you take more risk, you will end up there in 25 years. If you take lesser risk, you will end up there in 30 years. But it's anyways a slow process. So you have to make sure that it's anyways a slow process. You don't want unnecessarily expenses hindering your retirement plan or wealth creation plans. Health expenses could be really huge. Health insurance is cheap. Get insured against that. So second basic is get your health insurance. Third, if you have dependents or you will have dependents in your future, third is life insurance. You want to make their future secure. Once these basics are covered, then you need to assess your goals. There are tons of SIP calculators, and then you decide, you have this goal that after 20 years, I want 5 crore rupees. Now with that 50-30-20 rule, that my 20% monthly is 10,000 rupees. I earn 50,000 rupees a month, 20% is 10,000 rupees. If I invest 10,000 rupees every month, go to an SIP calculator, say mutual fund, you could expect a return 12% CAGR. Gold, property, 9 to 10%. If you do direct stocks and if you invest well, 15%. Try these combinations and check when are you reaching your goals. But another thing, just because you feel like which stocks I'll reach my goal, that's not enough. Stocks should also suit your temperament. Goals are one thing. Maybe If you plan on retiring at 50, you could retire at 54. But what you want is till the time you're 25, from 50, these 25 years, you should be in a position of mental peace. It's not that, because you want to retire early, for 25 years of your life, you were in stress because you invested in stocks and you were not mentally made up to invest in stocks. So, it's about all of that. No matter how less or how more a risk you take, wealth creation is a long process. So more than the asset class, it's about ensuring that there are no leakages in between, avoidable leakages. Health expenses, avoidable leakage. Stop that, So first and foremost, getting rid of your debt and avoiding leakages. That's more important. I've seen people, compounding wealth through simple fixed deposits, simply because they made sure that there are no leakages. So that's the most critical part.
Mm-hmm. Pranjal, last thing, I just want to bring in the angle of credit cards. Now, credit cards, there are two ways. Yes, definitely credit cards have a high interest. So it's said about, don't keep the loan, the due amount on credit card for a long time. But your thoughts, how can they help in an emergency, or maybe just help freelancers at certain times? How do you judiciously use your credit card?
Right. So, like any other financial instrument, credit cards has their own share of pros and cons. Yes. I mean, if you miss out on the interest-free payment duration, the penalties are huge. But, these days there are auto pay options. If you take a credit card from the bank in which you also have a savings account, there's this auto debit. So it just completely erases the possibility of you forgetting to make the payment. Not being able to make the repayment financially is a different matter, but the forgetting angle is gone if you have auto debit. Having said that, yes, credit cards have a couple of advantages. One is, they better protect you during online frauds. Say you made an online payment using a debit card. Because it's a debit card, money is instantly deducted from your account. And then if it's a fraud, you complain to the bank, it's a long process, and God knows when you will get your money back. And till then, you might face a liquidity crisis. But if it's a credit card, money never left your account. And you reported a fraud, it will be resolved in a couple of weeks, 10 days. It will not be charged in your statement. So, it's a great way to protect your primary savings account, where you could have lakhs of rupees in savings and you don't want it to be a victim of fraud. So, it's an additional layer. That's one thing I really like about credit card. Of course, if you have the discipline, you get 45, 50 days of interest-free money. So, someone who faces liquidity crunches for brief durations, again, it's a great offering for those. Usually, rewards and cashbacks on travels and spends is also a little more on credit cards. So again, if someone is disciplined, it's a very good resource.
The key word there is discipline. And I think not just here, Pranjal, but throughout any money management, discipline is the key. Thank you so much, Pranjal, for your time. It's been an absolute pleasure. And thank you so much for sharing your valuable insights with us. Well, ladies and gentlemen, that's all the time that we have on the show today. If you have any questions about personal finance or any suggestions, feel free to reach out to us. Our contact details are coming up on your screen. Stay tuned to the channel for the most up-to-date news. Thank you for watching and stay safe.